Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, stocks on Wall Street closed a fair bit lower on Thursday as investors digested the impact of the Fed's latest rate hike. Growth stocks and tech hit the hardest. The Nasdaq off by more than 2%, while the S&P was down about 1.2% and the Dow about 0.3%. What's the story in the global markets?
Yes, as you said, U.S. market did quite a bit of correction yesterday. If you look at the Dow, it gave up the earlier gains to close about 110 points lower on Thursday, while the S&P 500 and Nasdaq declined by 1.2 and 2.2%. Basically, on the data front, if you look at the retail sales numbers, it rose by by about 0.5 percentage point from previous month in March, which is slightly below expectation of 0.6%. While the jobless claims rose more than expected, coming in at 185,000, expectation was 177,000. These indications are maybe causing concern about the economic recession or slowing down of economy, while the interest rates are rising quite rapidly. If you look at the 10-year government bond rate, it rose to about 2.83% plus, which is quite a bit of a jump from the previous correction. So this is causing the uncertainty about the growth stock. So that's the reason why the Nasdaq declined by 2.2%, which is the most. As far as the earnings are concerned, the bank's earnings are coming out. It seems to be mixed signals, where the upbeat results came in from the Goldman Sachs and Morgan Stanley and Citigroup, while the Wells Fargo numbers were quite disappointing. But nevertheless, however, though, overall earnings should be reasonably in good direction, while there's some M&A indication that Elon Musk is trying to purchase the Twitters on a value of $43 billion.
Right, and that Wall Street sell-off leading Korean stocks lower today too. The KOSPI by about 0.75%, and the KOSDAQ by about 0.4%. The big chip makers taking a bit of a beating lately. Again, net selling by foreigners continues. What do you see happening in the domestic market?
Yes, the KOSPI continues to show correction. It declined by 0.76%, and KOSDAQ is down by about 0.38%. Main reason for that is because the currency continues to depreciate. Korean won has hit as high as 1231, now closing at around 1228.5, which has continued to be a quite weak won versus dollars. That is causing foreign investors to continue to be a net seller of the market. If you look at today, foreign investors net sold about 318 billion won worth of KOSPI and another 160 billion plus of the KOSDAQ. And particularly for the futures market, they sold 780 billion. So if you add all that three together, it's over 1 trillion won of net selling. Clearly, that is an uncertainty and concern for the Korean market. It is the domestic retail investors who are continuing to be a net buyer of KOSPI and KOSDAQ and even the futures market. We are concerned about uncertainties. Obviously, BOK has raised interest rate by 25 basis points on Thursday, which was actually faster than anticipated. Previously, people weren't expecting another 25 basis point hike. But nevertheless, I think that uncertainty about foreign investors net selling and money out from Korea is causing BOK to react faster. And also, if you look at the inflation numbers are all coming in at quite heavy. So therefore, BOK seems to be quite tight about the interest rate environment. Obviously, these kind of indications are not necessarily positive news for the equity market. However, though, if we think that the overall currencies to stabilize in the future and the various other currencies, including yen as well as the renminbi, if it stabilizes, then Korean won can stabilize and also foreigners could come back. But for the time being, the temporarily continuation of volatility is expected.
Well, now the latest in the oil price saga, we're back above $100 a barrel now on news that the European Union might phase in a ban on Russian oil imports. That's a contentious issue, though. Prices up about 2.6% in the past day, but more like 13% in the past week. What can you tell us about these moves in the oil market?
Yes, if you look at the Brent, it went up by about 2.68%. Now intraday is trading at about $110 per barrel on Thursday. Obviously, there's uncertainty about the sanctions. Clearly, the Russian oil import are in a position where the Europeans are banning, as well as the USA is banning the Russian oils. All that will result into higher prices, obviously, because of the supply issue. And the global economy is not necessarily slowing down aggressively, of course, even though China is shutting down or at least having a COVID-19 lockdown. But nevertheless, the economy seems to be quite resilient in various other economies where the consumptions are very strong, and therefore the oil demand seems to be quite heavy. I think that what needs to be done is that the OPEC Plus as well as U.S. to pump more oils and increase supplies. And it seems that supply is coming in, but it's not to the level that markets are happy with. All in all, most of the oil analysts are expecting that oil price is not going to fall. It might rise by another 10% over the next 6 months. Clearly, uncertainty is there in regards to the inflation pressure from the energy side.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it. Have a great weekend.
Thank you. You too.